Well, it's behaving like you would like. I mean, if you've owned gold, which we have, for some time, then these last 2 years have been good to you, and especially the last 12 months. We own the miners too, but the miners we trade. No, those get expensive sometimes. They're not that way now, but they can get really expensive, and you don't want to keep those. The bullion we hold all the way through, all the way. We keep it all the way, and I think people forget about that from a currency standpoint. Once the dollar is going to be declining, and the dollar's declined really forever buying power wise. You look at the last 25 years. But if you think the dollar is going to be declining, and I think it will be, I think all of these other countries want to sell the dollar. They want to buy gold. They don't want to put it in the dollar or the assets in the U.S. because they don't trust us.
Right.
And so they'll be buying more gold. And I think for somebody that wants to hedge, if you want to own treasury bonds, for example, you probably should own a little bit of gold too at the same time. But it feels as though that's what's happening in the marketplace right now.
Yeah. So I mean, you got the gold and you got the miners as a tactical play. Is that kind of where you're positioned, like all three strategies here? What would get you to add or maybe reduce risk?
Well, if we had a company that got too expensive, we would cut it back. In other words, if we were looking for a price to come to fruition over the next 2 or 3 or 4 years, and all of a sudden in a 6-month period we get that price, and we're way ahead of where it should be, and we'll probably cut that back some. We won't take it all, but we'll take some of it off. But I think people forget too that back in 2003, Warren Buffett wrote a letter published in Fortune. And in that letter, he said, I've never done this before, but I'm buying foreign currencies now because I think the dollar is going to go down. And then he set up a little idea about how they could issue these certificates that were really a form of tariffs. You want to get right down to it. But people forget about those things. They haven't been around long enough to remember that. And so for us, we're not buying the foreign currencies. We're just buying the gold because we think it'll stay up with everything.
Interesting. Okay. So you said new gold, and I want to switch over to miners because I know there's a lot of people watching right now that kind of are looking for some names that you're following closely that investors can still kind of capture upsides. Because as you mentioned, this price of gold, the all-in sustaining cost, some of these majors, they're printing cash right now. But are you looking at the juniors? Any names you can give us that kind of have better?
Well, we own the large names, obviously, because they're the best. And Agnico is our largest holding we have. It's been a great stock for us over time. You'll look and see we own Royal Gold, which is really we like to own things that, for example, that you can get royalties off of, and whether it's oil and gas or gold or silver or anything else. And we own Royal. We own the small company I just mentioned it's a smaller position for us called New Gold, but it's a very cheap small company. But the point I'm making is we own the larger companies that in that minor area. The problem about the juniors is we're not capable of doing the work, but you need to go out and see the mines, know the manager. That's a lot of work. Mm-hmm. And I don't think we're capable of doing that, and so we don't go that direction.
Yeah, Agnico, Sean Boyd, he's come on this show. Just a fascinating company and stock to watch, too. You were talking a little bit about trust with the U.S. right now and saying that some people are kind of hedging against that trust. I mean, the dollar fell 0.2% on Tuesday. And it seems like global confidence in U.S. assets is at least starting to show some early cracks here. Do you think that the dollar's reserve status as the world's reserve currency is ever at risk? Is it at risk in the next 5 to 10 years? Or do you think that the narrative is just way too overblown here?
Well, right now it's still the reserve currency. I mean, they can't, even though a lot of the countries are trying to get away from it. Mm-hmm. I mean, most 68% of things that trade now are traded in dollars. So you have to assume that's probably going to continue for some time. Now, I could see over a 10-year or 15-year period that goes lower and lower and lower. I don't think it goes away necessarily, but I think it does go lower because if you look at the BRICS, if you look at Russia and China and India and Saudi and Brazil, all those countries, they do anything probably to get away from doing everything in the dollar, particularly in the petro area. So eventually they'll probably come up with, if you look at those countries, they'll probably come up with some sort of currency on their own. Right now, there's not enough size. You can only deal in either the euro or the dollar as far as size, and so you just have to see how it comes out. But right now, there's still the currency, and doesn't mean that the currency doesn't go down, though. That's the thing.
Yeah. We heard, what was it? It was just Warren Buffett this past weekend saying it's really difficult to get away from a system of currency debasement. I mean, China is watching closely here, too. The Shanghai Gold Exchange is now planning to expand its vault network to Hong Kong with backing from China's central bank. And I guess the goal is to evaluate the yuan denominated gold trading and give Beijing maybe more influence over global gold pricing. How do you interpret this move in the broader context of de-dollarization that we just talked about it, and what it could mean for gold's role as a reserve asset going forward?
Well, I just think all of those countries, particularly China too, is saying, hey, we're going to put, if they say, okay, look at them in the last 3 years, all the yuan they put into gold, it's done really, really well. All the yuan they put in the dollar, not so well, you see? So they have to look at things like that. And I think they're deciding that, hey, you know what? We're not going to put any more money in these assets here in the U.S. because they don't want us here. And I think they've gotten that message loud and clear. And so I could see them buying more gold and buying more assets in other places, not the U.S.
Yeah. I mean, we're seeing it. We're seeing this really remarkable, kind of figure unfold in the current markets. There's a wave of dollar selling is sweeping through Asia, starting with a record rally in the Taiwanese dollar that triggered deep moves in the Singapore dollar, the South Korean won, the Chinese yuan you just mentioned, even Hong Kong's currency. Now, the backdrop here is critical because for decades, Asian economies used their trade surplus to buy U.S. assets supporting the dollar. But this recent shift suggests that the pillar of dollar demand might be starting to crack. I mean, some analysts are even calling it an Asian financial crisis in reverse. So, I mean, my question is, how do you interpret this dollar unwinding in Asia? Does it mark a turning point in global capital flows? And what does that mean for U.S. dollars and for gold as a hedge against dollar weakness?
Well, I think it started back in the Biden administration when they froze the Russian money. When Russia invaded Ukraine. And so all the other countries said, hey, you know what? If they do that to Russia and there's something about us they don't like, they'd do it the same thing for us. That started a lot of this, I think, and happening. It started, and that was a few years ago, but it's still happening. And I think now, the whole idea now is that, we'll have some dollars, but a lot of the surplus we have, we're going to do something else with it besides buy a U.S. asset or do that. In other words, we're going to put in gold, we're going to put in oil, we're going to put in something, but we're not going to put it where the U.S. has some sort of control over what we're doing.